everybody. Welcome to our panel on crypto security, payments, and insurance. We've got an amazing lineup for you today. I'm going to ask each of our panelists to introduce themselves and talk a little bit about what their companies are doing, and then we'll dig into some questions. Josh?
Hi, I'm Joshua Goldbard. I am the founder of MobileCoin. MobileCoin is the only cryptocurrency that's integrated into Signal Messenger. Our software is installed on approximately 200 million phones worldwide. We've been going for about 4 years now. Our investors are Steve Jurvetson, General Catalyst, FTX, Coinbase, all the sort of major people in crypto.
Very cool. Hello, I'm Pascal Gauthier. I'm CEO at Ledger. Ledger, we're a security company. We do hardware wallets, and we have also an enterprise offering called Ledger Vault. Who has a ledger in the room so I know who I'm talking to? OK, we can do better than this, but thank you. And then ledger.com for the others. You can go online now and buy from your mobile phone, and then we'll ship you the key in less than 24 hours. And then you'll be safe and secure. You're welcome.
Thank you. We thank you.
I'm Bruno Macchialli. I'm CEO of Delchain Limited, which is part of Deltec International Group. We are a pure financial digital asset player, locally based here in the Bahamas, fully regulated, and providing multiple set of services such as trading, cold storage, staking, lending solutions, but also advisory. Thank you.
Hey everybody, Joe Ziolkowski, CEO and co-founder of Relm Insurance. Relm is a Bermuda domiciled, fully regulated specialty insurance company. And we launched Relm in partnership with Deltec with the intent of providing informed and dedicated capacity to companies operating across the crypto ecosystem. And fast forward 3 years later, we've now provided coverage to companies operating in more than 30 countries around the world, public, private, traded on more than a dozen national exchanges. Great to be here.
Great. Well, why don't we start talking about the ways that all of these businesses interact with one another to provide really critical infrastructure protection for a space that is, I think, generally thought to lack some protections, where I don't think that's completely true. Josh, you want to start?
Yeah, so we use Ledger. It's a hardware wallet that helps us to secure kinds of crypto assets. MobileCoin will soon be integrating with Ledger. We bank with Deltec. Relm was going to provide our D&O insurance, and we're now looking at using them for insurance products in the space. I mean, we work with everybody up here.
I mean, I'm going to say exactly the same thing, so sorry. But the way that we think about the problem is we're thinking about building a product for the B2C market. I think right now this market is still business to geeks, B2G. And we've been in the B2G business since 2015 at Ledger. And what we're trying to figure out for the future is like, OK, how do you make it more B2C so it's actually ready for mass adoption? And if you think about the problem like that, then you need to solve all the pain points, which is security first, Web3, crypto, Bitcoin, however you name it, doesn't work without the security of the private key. Ease of use needs to come second, so you hide the complexity of the blockchain, you hide the complexity of all this lingo that we use every day to just build a user experience, and then you bring the comfort for the users that they usually have when they try to protect value, which is the insurance piece. And so we're trying to build this as layers. Insurance is actually already native in some of our products, like the enterprise product, and we're working with some of these people on the panel to try to do even more. And we think 2023 will be when Ledger will switch into business to consumer. I think we're still a little into business to geeks right now. And don't get me wrong, I'm a geek. We love the geeks. Nothing wrong about the geeks. But we're moving into business to consumer, and prime time will be next year.
And so I think that's a great segue, too, into kind of the big picture and the high amount of perceived risk that is always associated with crypto. I mean, if you think about it, it was January of 2018. We're talking 4 years ago, where there was a $500 million hack on a custodial exchange because all of that crypto was held in a hot wallet with a private key that didn't have multi-sig. That's lunacy, right? And if you think about how far regulated and transparent custody solutions have come over the last 4 years, the amount of investment that's made in advanced encryption technology. It's the alphabet soup of industry standardizations, NIST, SOC, ISANA. And I think from our perspective on the underwriting side, we've had the benefit of reviewing the custody protocols for custodial exchanges and custodians all over the world. And it is mind-boggling the amount of money and resources and talent that is going in to develop the hardware, to develop the software, to develop the advanced encryption technology to ensure that we are building a resilient foundation that is suitable for mainstream crypto adoption. So high perceived risk, but we've made amazing strides over the last 4 years.
Maybe I can add a few more things on our perspective, right? Because Delchain is a custodian regulated, and we are actually having the infrastructure to provide that. And it's about using what those gentlemen are saying here between the technology, which is an important point of having a custodian solution for our clients, the insurance side, that is, as Joe said, underwriting what we're doing, so we're covering. Obviously, about building our own internal policies and procedures that are very important, because you can have the tech, but if you don't have the resources, to make sure that you are compliant, to provide such services, you're missing a big part of the action. Being also audited on a yearly basis by neutral companies that are reviewing what we're doing is very important as well, because the custody solution back in 2018 are different from now. It's always evolving. So making sure that we're always up to date in what we're building is very, very important. And I'm pretty sure that in the coming years, it's going to be going to another level. And you see that as well, Joe, I'm pretty sure.
Well, and Pascal feels it probably much more financially than we feel. I mean, trying to go through your SOC 1 when you guys went through it, and I think you're going through a lot of other, I think maybe you've got a SOC 2 in the works, if I'm not mistaken, but it's that critical aspect of gaining third-party trust. And we now exist, I think, fortunately, in a crypto environment where it's not enough to just stand up in the marketplace and talk about how great your solution is. Fortunately or unfortunately, you now have to go get Deloitte to provide a security audit, and you have to have industry classifications and certifications. And I think what that's creating is a form of technology and a way to move these assets that is going to be far more resilient and far more efficient than the financial system that we all know today.
And what have you seen, all these developments, how have you seen them impact the willingness of institutional investors or others to come into the space? I have to assume the protections that all the companies that you guys work with and for have had a big impact on people's willingness to kind of put a toe in the water here. Josh, what about
Yeah, so I think what institutions need in order to be part of crypto is extremely high security. They need to feel safe about their money. They need to have the ability to send their money predictably so that they know it's actually going to the right place. They don't want to accidentally mistype a character and lose all the money. They want to have a secure financial system, one that has all the benefits of digital assets, but has greater security than we can deliver today with money. And I think that that's really what crypto provides and what we've been building for the last 6-ish years. There was sort of the infancy of Bitcoin where it was very much the Wild West. And then over the last 6 years, we've seen a lot of companies just come out of the woodwork and build the kinds of things that enterprises and individuals need to transact in a new financial system. And I really believe that over the next 20 to 50 years, we're going to see crypto basically eat the global financial system. And this is happening one bite at a time. You see this conference, you see the industry, you see all the innovation, and there are just new products. There's consumer products that are coming out, there's killer enterprise products, and all of them have great user experiences and amazing security. So that's what we need in order to continue sort of just attacking this big global world of finance.
There's nothing more terrifying than transferring crypto, right? Literally, right. I get sick every time.
So this is a thing that we designed in MobileCoin where you can't mistype an address. That's because addressing a mobile coin is just a phone number. So you type a phone number in Signal, you hit send, that's it. So there's no way to mess it up.
So it's like Zelle or Venmo, only much, much higher level.
Well, it's a non-custodial, fully private, end-to-end encrypted Zelle or Venmo.
That's great. That's what we all need. Then I could sleep at night. Pascal, what about you? What do you think about all the efforts that Ledger's making and how it's impacting institutional investing and comfort levels?
Sure, but let me first disagree, because I told you that I would disagree and try to make this panel fun.
Yeah, yeah.
All right, here we go.
He said he was going to
So why do they disagree? No, I think the industry is focused too much on the top line, and actually I disagree that people are worrying about security, insurance, etc., etc. And I've been trying to sell products in this industry since 2015, and there is a disconnect between what people say and what people do. So they always say the things that they have to say. Of course, like you're not going to say, no, I'm just a crazy person and I don't care about security. So you say, sure, I care about security, but then actually you don't do it. And it's not just in crypto. Actually, if you ask like the CEOs of the top 500 companies in the US, like how much money they're investing in cybersecurity, for example, you'll find out that usually they spend more money after they had a breach or a hack than before. It's like, you always take care of that problem like after it has actually happened to you. And I speak also from experience myself. Like, this is what happened to Ledger 3 years ago. I can tell you that we're spending much more money in terms of our cybersecurity today than we did back then. And also in our defense, we're a much smaller company, all of this. But when you think about the market, right now the market, you have hacks every day, and the market is growing very fast, and it's very normal. I mean, if you look at the gold rush, in the gold rush, people are, focus on the top line, like, but when they come back from the mountain and they go back in the village, then they have the gold in their hands and then they worry about what to do with it. It's usually when they get hacked. So this industry is still vastly unsecured. Also because technologies for security in this industry are at the forefront of these type of technologies. I mean, if you think about it, like we never try to protect a private key where if you touch it, every transaction is immutable. It's a very hard security problem that we're trying to fix. And if you think about it again, like how many companies are security companies in the space? I mean, you have Ledger, okay, so we're taking care of that problem. Who else is there? And so that tells you a little bit about the immaturity of the space, like still today. Like people are focusing on making money top line, they're not really focusing on security, not really focusing on more and more on insurance, but I would argue that people are vastly running things that are vastly uninsured, and how could you insure it? Like if you talk to most insurance companies, they still don't want to touch crypto with a stick. I'm not talking about Relm here, but I'm talking about AXA in France that we know very well. One of the biggest insurance company in the world. Like what do they do in crypto today? Not much. And so again, back to my business to geek thing. Like I think this is a good moment. And we're about to go into real business. So in the end, I agree that this is where we're going, but I think we're still not there. And people should not just say it, but then they should do it. And so that's what we want to see more in the market.
Just really quickly, I just want to say that what we have to make are products that automate the security for users.
100%.
Well, and Pascal, so on that topic, I mean...
Yes, let's go.
I couldn't hear what you said. I think one of the other things that we've all seen over the last handful of years is a consolidation of assets onto platforms that are checking the box, or HSMs that are tested and resilient and proven in the marketplace. I mean, what's your perspective on this this trend of entrepreneurs recognizing that it's probably not in their best interest to create their own proprietary custody solution, use HSMs that are tested in the market, or allocate assets to qualified custodians in a manner where now we have an aggregation of assets within the top 8 or so exchanges. I mean, how do you see that playing out from a risk standpoint going forward?
Okay, so I will not give names, but I can tell you what I know about security and this problem. So whether it's an HSM or a ledger, you'll be shocked to see that some of the biggest exchanges on the planet are actually securing their crypto in a nano, which is fundamentally wrong because nano has been designed for a single usage, which means that To every nano, there is 24 words attached, and then the problem becomes where are the 24 words and who's got the PIN code? There are billions of dollars today that are stored on nanos from big exchanges or big financial institutions, and that's just the wrong way of doing things. And I'm not talking about like the smaller exchanges that nobody knows about. I'm talking about the biggest ones. Worse, like I heard the other day that one of the leading financial institutions in the space is only securing on MetaMask. And I'm not talking MetaMask Enterprise, just MetaMask. So if you go on our website and if you check my attack lab, we have an attack lab at Ledger called the Dungeon. So our job is to hack everything and to try to break everything before the bad guys actually do it. And then we warn people to say, hey, this is how you should fix it. I can drain, if you have your coins on your MetaMask today on your phone or your computer, I can drain that in less than 30 seconds. Okay, so software to protect cryptocurrency doesn't work. And most of the hacks that you're going to have at your financial institutions are actually not necessarily coming from the private key security itself, because once it's on the nano, I mean, it's secure. You can try to code an HSM, but usually most HSMs in the market have not been battle tested for security issues, so you actually don't know what can happen to your HSM. But let's say the key is secure. The problem with an HSM or with a nano is like, who's sending an order to the nano? Like, what's your governance model that sits on top of it? And this is where the hacks are happening. Most of the hacks are happening into the governance, like who's got the 24 words. And you might say, okay, but larger financial institutions can figure that out with compliance. Actually, no, they don't. The other day I got an email at midnight. I was in my bed, going to bed in Geneva, and one of the largest financial institutions on the planet was texting me to say, hey, we got $300 million on a nano, we lost the PIN and we lost the 24 words, what do we do? I'm like, okay, but then you're fucked. And that's what I said. And so finally
that's a bad day.
No, I mean, so they found the 24 words, but then the question is, okay, but how do you lose them and who had them? So that's a huge governance issue. Where were the 24 words? So nano is not, and so most of the industry is securing funds on nano today, so it's not good. You should secure your funds on at least Ledger Enterprise or find a custodian or someone that has sort of real security but real governance on top of the security. These are the two things you need to worry about.
Bruno, anything you want to add about where Delchain is and how you're advising your clients as they start looking at this space?
Well, when clients are coming to us, especially for custody, which is one of our services, obviously our role is to provide them the highest security. Security is not only, as Pascal is saying, the tech side. It's about building the governance, and that's part of our policies and procedures, how we build that. Who's part of it? How do we mitigate all the risks that can have there? How do we make sure that the information of who's doing that, who's part of the chain that we are building is keeping safe, but also that we also need to protect our employees as well, because they are part of something that can be part of a large flow of money. So indeed, having all those pieces between insurance, the tech, our own policies or procedures, what we're building with our compliance team as well, is important. So those are all the ingredients we need in order to build a strong custody solution. On top of that, we're also a regulated entity. So, and this is how people should always seek for a player that can protect their assets. It's not only one, and the tech is not the only thing that people should consider. That has to be much more than that. So we regularly, on a yearly basis, review all the players in all the things we're doing, including tech, because it's our duty to make sure that we are always proposing the best solution for our clients. So it's a lot of work, but our industry is moving very fast. We have no choice. If we decided to provide a solution, we must keep on we have to be on top of it. We have no choice.
And Joe, what about the role insurance is playing in the space? I mean, you've been providing insurance for over 3 years at Relm. What trends are you seeing? And are more traditional insurance companies trying to get into this space now, or?
Well, as Pascal was just alluding to, right? I mean, there are some fundamental challenges that I think have significantly slowed the evolution of traditional insurance capacity to come around with an appetite for companies operating in the crypto space. And some of it does have to do with what Pascal was referencing, where it's one thing to be a custodian to say this is our process and these are our documented procedures, and it's another thing to actually adhere to and manage and update those policies and procedures over the course of a day, a week, a month, and a year. And because of the variability of custody solutions and the variability of blockchains on which applications are being developed, and all the variability across the space, what you have is a lack of standardization, right? And traditional insurance capacity likes standardization. Traditional insurance capacity likes regulatory clarity. And most importantly, traditional insurance capacity likes 10 years worth of statistically significant loss data that puts them in a position to confidently project future losses. And we don't actually have any of those things in crypto right now. And that is one of the large obstacles of getting a lot of the mainstream insurance capacity providers to move into the space. But it doesn't mean that that's the only way to provide insurance. I mean, if you look at the portfolio of companies that we've built over the last 3 years, these are very manual, in-person, account-by-account underwriting initiatives where our insureds want the coverage, mainly because they need the coverage, right? They have to satisfy stakeholder concerns. So in order to put us in a position to account for the lack of loss history and to account for the lack of regulatory clarity and the variability of technology, we need to have a very intense understanding of how your company is operating, how the leaders of your company are charting the course for the future, and how you're going to keep your investors happy. And if we can get that level of transparency, for us, that's put us in a great position to provide an incremental amount of support to the crypto and blockchain space. And it's only a matter of time before the bigger names come off the sidelines. I would say, too, one of the other challenges is, I sleep soundly at night with the risk that we retain on our own balance sheet. But the reality is, you guys need far more limits of coverage than we can provide, right? And so the way that we insulate our balance sheet in the traditional insurance space is to buy reinsurance, right? We have no reinsurance. The same challenges that MobileCoin has finding primary cover, we have finding reinsurance. And so we've had to look to alternative strategies as a way to provide an element, not just risk transfer to sustain our resiliency, but to actually commercialize the limits that you guys need in the space. And so we just launched this regulated collateralized insurance facility, the first of its kind in Bermuda, and this facility can actually be collateralized with fiat and crypto. Right, so now we can align ourselves with investor capital. If we can't find the capacity in the traditional reinsurance market, that doesn't mean that's where our search ends. Right? We find risks that we feel are good. We find investor capital that feels confident in our ability to underwrite them, and then we build capacity through this facility. And these incremental steps toward providing regulated insurance solutions is what's going to need to continue happening in order for a lot of the major capacity providers to come over.
Josh, I'm going to ask you the next question, sort of tying some of the topics together that we've just talked about. But as zero-knowledge technologies improve in capability and scope, can we have compliance and privacy together? We've talked a little bit about regulation. We're not a regulatory panel, but we'll maybe touch on that a little bit because everybody loves regulation. But what do you think?
So zero-knowledge technology allows you to have secrets that you can prove that allow you to spend money and transfer value in a way that we've never been able to do before. Now, this is very interesting in the context of the law and the way the world works today with the movement of money. So I think the real heart of the matter is, what is the maximum amount of privacy that we can have within the rule of law? And I think the answer is that at the consumer level, you can have a great deal. When you start interacting with institutions, when you start moving money through exchanges or merchants or large-scale transactions, I think that that's actually a very different world. Regulated entities like exchanges have certain financial reporting requirements that individuals do not. If I send you $1 million, you have a responsibility to report that on your taxes, but there is not a financial crime reporting requirement for an individual. If I send $1 million to FTX and they don't identify me, that's a huge problem for them. And they're actually criminally liable if they don't deal with that. So I think that there are very different rules for individuals than there are for institutions. And what we're trying to build at MobileCoin is the maximum amount of privacy possible within the rule of law. So Signal today is a messaging app that is certified for use in the United States Senate and the European Parliament. They've successfully brought end-to-end encrypted messaging to the world. And they've done that in compliance with the law. They did that by very carefully designing their system to fit into the way that the world works. So I think that we have a duty as technologists not just to build the maximum amount of sort of technology that we can. We have to make stuff that people can use every day. There's no point in having privacy protections if you can't spend the money.
That's a good point. Pascal, this is something I just was looking, I was reading online the other day, but Ledger's now incorporated some tax accounting software into your product as well, right? I thought that was really interesting because in the US it's such a big problem for people with wallets tracking. For our IRS is still sort of a disaster when it comes to guidance on how to track for cryptocurrency transactions, but I thought that was a really interesting development. Is that based on Ledger's focus on helping their clients meet regulatory obligations, or how do you think regulation is working towards mainstream adoption of crypto and other and Web3?
Okay. So 2 questions. The first question is, we're developing Ledger, whether it's for consumer or enterprise, as a platform, and so third parties can actually plug their services on top of the platform for the users, right? So our 2 jobs are to make things secure and easy to use. And so typically, if you have to declare your taxes, we're going to try to make it as easy as possible for you to do it very natively in your interface. But that's true for taxes. That's true for sort of everything else that you want to do with your coins, whether you want to buy, sell, stake, declare taxes, et cetera, et cetera. And for this, it's just a service to the users, and the platform is open, so any third party can actually code on the platform and bring their services. They don't even need to ask us anymore, sort of.
Interesting.
So that's pretty cool, and that's a development that has happened in 21, that we're rolling out in 22. We have our Ledger Developer Conference in New York in June. It's called Ledger Open, and we have another one in December. So that's a big push that we're doing, so users have maximum usage of the platform, and they can use Ledger as the primary security, and then everything they can use in Ledger Live or in Ledger Vault. When it comes to regulation, I think that what's happening right now is troubling, because I think most regulators don't understand how profoundly this technology changes everything, and so they try to apply old rules to new world. And old rules would make sense, because if you think about the way that the financial system works before or today, it's very broken. Like, you don't have one big technology bed for everything. So I can understand why you need regulation, because it's such a black box that you would say, okay, look, I don't really understand what's going on here, so here are the rules that you need to obey, right? So that's why you have regulation. When it comes to crypto, then it's very different. Like, if you're going to do something bad with your Bitcoins, don't, because that will be in the ledger forever. And so, whatever you do today that is wrong, like, in 5 years, we'll find you. The Bitfinex hack is exactly this. Like, those people were found 3 to 4 years after the hack, and there was actually a very funny picture. So they got the $3.6 billion back, and so you got the cups, you got a table, and you got a ledger in the middle of the table, and so I'm like, so who's got the 24 words? And so you can see how this could be hacked again. But anyways, so eventually we'll find you, and so that changes everything, right? Because why would a criminal in their sane mind use a technology that is publicly open, that everyone can check, and where in the end we will find you? So I think regulators have it wrong, because for 2 reasons. One, they don't really understand, so they apply sort of old rules, in this new game. Or they have a dogmatic agenda. They don't like freedom, they don't like what's new, they don't like innovation, etc. And so if it moves, they try to kill it. I think, for us, a few provocative ideas. I think it should be as little regulation as possible to let innovation run. And again, if you do something wrong, we'll find you at some point. Like, instead of spending tons of money doing KYC, AML, and all these things, okay, let's not do that anymore. Let's not suspect everybody in this room to be a drug dealer or a terrorist first. Let's just everyone do what they do. If they do wrong, we will find them, and use the money that we're not spending into lawyer fees and etc. to do KYC, AML, to fund the police and have a real police online, like a real cybercrime police or a real cybercrime army. Because what's happening right now in terms of cyber criminality is huge. And what's happening also is the police cannot do anything for you. So you do your KYC AML, the bad guys will still do what they have to do. It's not like we're selling less drug in the world right now, like we're selling more. And so bad guys will find a way.
Yeah.
Most of the time it's actually not crypto, it's within the normal financial system. And so we can see that all these policies are vastly ineffective. And so I would argue, okay, let's stop spending money like this and let's be pragmatic. And so I'm advocating for being pragmatic and I'm advocating for self-regulation. But let's use the money that we would not spend in KYC AML to fund the police. 150 billion euros it costs in Europe, KYC AML every year. Let's take 50 billion and fund the police with this. I mean, the police, you give them 50 billion, that's the first time they'll see that kind of money. And actually they can do some work. When I go see the police in France because there is an issue, a user got scammed, etc., I mean, they got no power. They can do nothing because they are not funded enough to actually go after the real criminals. So I think that's what we should do. Thank you. Come on, yeah.
So the counterpoint, unfortunately, to that, right, is personally I agree with you, right? But I think professionally, and if you think about kind of the core infrastructure that's represented on this stage here, including Deltec Bank providing an enhanced compliant framework for the onboarding of some of the biggest names in crypto to give them something as simple as a bank account, for God's sakes, right? Jumping through hoops to deal with what we could all agree are, at best, uninformed compliance requirements. At worst, perhaps something more along the lines of what you were referring to, in terms of stifling this technology that's building an unbelievable amount of momentum. But this is the game we have to play if we're all committed to kind of this long-term goal of mainstream adoption and getting the institutional money off of the sidelines and giving them a clear and compliant, unfortunately, compliant roadmap into this ecosystem that I think you've spent a lot of time building and supporting over the last 8 years.
I mean, I think it's not a black and white situation. This is where we are is here, and where we need to go is there. I think technology solves these problems. I think we're trying to solve problems with paperwork, where technology should solve these problems. I mean, typically, I give you an example that is not linked to crypto, but okay, so Twitter. So people complain about bots on Twitter, complain about fake Twitter profiles, etc. Okay, what if you could only log in Twitter by authenticating yourself with your ledger, for example. So suddenly we know that you're a human being. Like we know this changes a lot because now everything you're going to say on Twitter, let's say that it's against the law because you're being racist, for example. Okay, again, it's in the blockchain and that can follow you forever. And so very difficult today to actually prosecute people on Twitter because who knows, it's pseudonymous, etc. It's very hard, it takes a lot of time, etc. And so let people run free on Twitter as long as they connect with their decentralized ID. And then if they don't obey the law, it's very easy to find them. And so actually, I think it's a much better way of doing things. You keep anonymity. You say whatever you want because opinions should be free. Free speech should exist. However, if you don't obey the law, then equally, we should be able to find you and find you easier. I'll give you another example. Online porn. It's a big problem for the kids. Are you 18? Yes. Okay. I don't want kids to connect to online porn. I think it's a terrible idea. Now, if they need to connect, if they can only connect with a decentralized ID, and decentralized ID can prove that you're 18 or not, then I think I think technology helps on all these things and is much better than compliance and paperwork, etc., because it's actually real. And so actually, I think the technology is taking us somewhere that is better for humanity in general, fixes most of the problems the internet has today, and regulators are trying to temper this with sort of bad regulation. So I think we should think technology and future versus using old recipes.
In our case, which for Delchain, we're bridging the traditional financial world and crypto. So we're really seeing those things. So it's very difficult to say we go extreme right or extreme left because this is the value proposition we have our clients. But the reality of our market is the crypto industry is moving very fast. Every 3 to 6 months, you have a new trend. And people like us are building financial solutions for our clients. And the third layer is the regulation will come up after that because something has been created. So they cannot regulate something that's not there yet. So it's a kind of agility that is needed, but obviously they cannot create something that it doesn't exist. So I believe if we want to keep on going and moving forward, and we're always talking about crypto world is more taken as dog years because we do a lot in a year. We have to be agile, and once everyone is really understanding that trend with the 3 layers, and once regulators are getting in, everything is being shaken up, and it's removing things in a different form. But I think there's a need. But indeed, what you mentioned with the DID is very important, and I believe that's the future. That's for sure.
We're down to, I was going to say, you want last comment?
Yeah, so I just want to say that change in society depends on the ability for people to break the law. If you look at women's suffrage in America, it was illegal for women to assemble. If there was perfect tracking, women would still not be able to vote in America. Gay marriage required gay relationships. The ability to have marijuana and personal pharmacological independence required people to break the law and smoke marijuana. In a world of perfect identity and perfect tracking, there is no change. We know what those societies look like, and we don't want to live in that society.
I agree with you.
That's what I want to say.
I think we end on that point. That's great. Let's go break some laws
In
and
the end, we'll
innovate.
agree.
How did we get through a 40-minute conversation without talking about NFTs? I mean, that's kind of refreshing.
We didn't get to NFTs. I know, we're just about time. I want to thank the audience. I want to thank the panel. If anyone has
Merci, everyone.
questions,
Thank you
feel
very much.
free
Thank you all.
to pop up. Thanks, guys.